Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar Carboni's 1435th edition of these educational videos. These videos are geared to teach you the art of technical analysis. Traders, as we know, futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. You need to put your stops in first. You must have risk capital to lose. These markets have been insanely volatile. Be careful. If you do know about stops and you do like to trade, let's look at what's going to happen. Video 1435 is for trading, which happens to be a holiday here in the USA. It's President's Day, but it's basically for trading February 15th, 2016. Traders, you're looking at the Dow Jones Industrial Average Daily Bar, and this is what I've gotten letters from 3 or 4 Elliot technicians, and I've gotten charts sent to me, and they're calling this a double bottom. Now, Elliott Wave is calling it a double bottom for a different reason. Traders are calling it a double bottom because it looks like a double bottom, and I am here to say that if you just remove Friday, that this is likely not a double bottom because none of the other markets that lead the Dow Jones Transportation Average around have double bottomed. And if I add the day back in, recognize this, it's only the Friday leading into a 3-day holiday weekend. So it came up a little bit on a Friday leading into a 3-day holiday weekend. And the Elliott Wave theorists came out of the woodwork, and many of them wrote to me, and let me just say this. Elliott Wave traders, Elliott Wave theorists, seriously? It cannot and does not work. Elliott Wave does not work. I can show this to you. I can prove it to you, which I would be willing to do in a later video when I'm standing in front of the camera or at livewithoscar.com. Don't need to go into it now, but I will tell you this. If this happens to be a double bottom, it's because it turned out to be a double bottom and would have absolutely nothing to do with Elliott Wave theory. It is nonsense. It absolutely does not work, and I will prove it to any Elliott Wave theorists live at my site, or I can help you out in my next video. Forget about that stuff. Off the screen we go. Is this a double bottom? Well, it could turn out to be a double bottom, but I am here to say I don't think so, and here is why. There are other markets that would have to have double bottomed as well in order to consider the Dow Jones Industrial Average double bottomed. I say it's got enough room to move back to this average because this average has been its nemesis since it started to go down. And maybe it can get back to the average. I don't know, but I don't think it's got much more in it. We will take it one day at a time. Let me show you some proof at why I don't think we can quite double bottom right here. You're looking at the Dow Jones Industrial Average, right? Well, when you go to look at the leader of this, the Dow Jones Transportation Average is the leader, and this is not what you'd call a double bottom. It doesn't look anything like a double bottom. It looks like a bear flag, in my opinion. This last bear flag worked really well. The bear flag here worked well. The head and shoulders up here worked. Failing at the OMNI average has worked. The market has been bearish all the way down. Broke these, what should have been a double bottom here, was not a double bottom because the bear flag was taking place at that same time. The market cracked. We now have another bear flag. A lot of info on this chart, but it's kind of clear. You should be able to understand it. We have another bear flag. Maybe it's got room to get to the top of the bear flag. Maybe. But that should be about all because that's all that has happened throughout this entire move with our leader is we've stayed inside of this bear flag. So the market's going up for one day on a Friday, the day before a 3-day holiday here in the United States. Doesn't impress me at all. I am telling you, do not fall in love with the upside. Let's look at more proof. Let's go to another chart now, and let's look at this one over here on chart 13. I think I got a pretty picture for you. The Russell 2000, traders. The Russell 2000 is just dropped out of a bear flag, worked really, really well, is failing miserably at this average. Maybe it's got enough room to get back to the average. Maybe, just maybe. But that's probably about it. I'm not looking for a major rally. Why? We've been coming down for some time now. You get a little bounce, you head back down again. Don't fall in love with the upside. You see what I'm saying? These bounces now are being met with resistance. So be careful there. That's your Russell. There are other charts I want to look at. Let's look at this one. E-mini S&P. Take a look at this bad boy. I gave you a target in my last video. Target was 1807 to 1799. We cracked right down to 1802 and a half the very next day. The very next day the target was hit. Bravo for technical analysis. But that target's done. Check mark, on to the next one. Omni has been absolutely correct since the oh crap video. In fact, Omni was even more correct because right around here, Omni told us that we topped, and I took do not fall in love with the upside off my board. And since then, we have acted like a market that has topped, and we came down, made a bear flag, moved back down. If you ask me, you have no room here except for maybe back to this, which has held us in check since the down move started. So I'm not looking for any major upside, and if you Elliott wave theorists think that we bottomed, you also have mentioned that you bottomed in crude too. Let me go show you what that is. The Elliott wave theorists told me that we bottomed in crude as well. Let's go look at crude. Here's the crude oil market. This is what would be known as major resistance because of how long this was a support area, bouncing from it over and over again. Then it finally breaks through the support, gets back above it for just a short period of time, and starts heading right back down again, meeting this resistance up here. Major resistance in crude oil right now. Major resistance. I don't think crude has bottomed yet. I think when you have this sort of resistance above the market, crude doesn't just bottom that easily, but we'll see one day at a time. The same theorists that said S&P has bottomed on Friday has claimed crude has bottomed. I say, let's see crude get past this area first before we claim bottom. Let's see it get past this little area, and we'll talk about the possibility of a rally. Until then, a small rally maybe. Bottom, I don't think so. That takes care of your crude oil. Let's head back now to that S&P chart and move forward from there. Traders, this one's another leader. So you've seen the Russell, right? The Russell is not telling you that the market is ready to bottom, at least not from what the Russell's showing us. The S&P is not showing us that the market is ready to bottom yet because we had a big bear flag, bounced off that bear flag, are running back up. As you've seen, the Dow Jones Transportation Average in no way is pointing towards the upside yet. So I'm not sure that we're going to get anything more than a small bounce out of this market at this point in time. Let's go look at the DAX. The DAX doesn't look any more promising. Look at this DAX. All right, so major resistance inside of this channel. You can't seem to get out of this downward channel. So if you have room just to get about up to here. And then let's get rid of the channel and say the channel doesn't exist at the moment. What does? Well, if you ask me, then we're building what I'd like to call an F flag right here. Either of the two are going to be considered bearish. So you've got the F flag right here, or you've got the channel. You choose which one you want to believe in. Neither of the two look extremely bullish to me at the moment. So when we go back and look at the Dow Jones Industrial Average, and you want to call this a double bottom, do your homework on the other markets and see if it can be a double bottom. Can it be? Well, let me rephrase that. Of course, it can turn out to be a double bottom, but with all of this resistance heading its way and the other markets telling us it's not really going to be a bottom, I don't know that it could bottom just yet. Be careful out there. We're not going to be trading on 2/15. It is a U.S. holiday here. In fact, tonight I'm going to take my lovely wife and children out to dinner for Valentine's Day and go see a movie. But I did want to enlighten you on the charts I have been looking at and show you if you are going to trade what you had facing you for trading on Monday. Traders, remember, the transportation average is deemed the leader. It doesn't always lead us around, but it is deemed the leader. And right now, the leader is in a bear flag. It is not showing a bottom type formation just yet. All right, traders, that's what I wanted to show you. I want you to all come down to livewithoscar.com. Come join me in my free trading room. Remember, keep your emotions out of trading. One of the best things you can do with helping to keep your emotions at bay is to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders. I'll see you all at livewithoscar.com.